Hey, good afternoon, everyone. We still have traders coming into the room, so I'll start promptly at 4. We have just about one more minute. Thanks for coming in. Hey, good afternoon, everyone. This is Mark from Right Line Trading, and I want to introduce you to a real different kind of indicator, and one that I think is really going to be real helpful to your trading. It helped us this morning. We took 3 trades and got 3 winners real quickly, and I'd like to show you how it works. It's called our 3-line indicator, and here's what it looks like. I'm going to show it to you on a live chart so you can see how it actually predicts the future movement of price. But I wanted to go over each line with you individually to show you what it assesses. The first line assesses momentum on a multi-time frame basis. Now, it doesn't look at any information from your trading chart. All the assessment is done from the 2 higher time frames. The middle line is stochastic, and it does a very, very unique assessment of stochastic. Again, it doesn't look at any data from your trading chart. It only looks at the movement of stochastic on your 2 higher time frames. And the third line is order flow. Same thing, looking at order flow in your 2 higher time frames. I'm going to show you how the indicator calculates order flow. And obviously, if it's red, it's down on your 2 higher time frames. If it's green, it's up on your 2 higher time frames. And if it's yellow, it's indeterminate, which means your 2 higher time frames are not moving in the same direction. So it gives you a very, very accurate assessment of what all of these parameters are doing on your 2 higher time frames only, and it doesn't look at price movement on your order on the chart that you're trading. And let me, all right, before I do this, what I want to tell you is this: the algorithm in the indicator automatically determines your 2 higher time frames. If you're trading at 3-minute, it looks at the 9-minute, a chart that's 3 times longer, and then a chart that's 3 times longer still, 9 and 27-minute. If you're trading a tick chart, like a 377 tick, it looks at the 610 tick, and then the next higher fib number tick chart. If you're trading range, it does the same thing. If you're trading a 5 range, it looks at the 8 range and the 13 range. So from the speed or the time frame of your trading chart, it automatically makes an assessment of the 2 higher time frames. Now, I wanted to look at the order flow line first, because it's really the most complicated in terms of how it does its assessment. You know that every candle creates a market delta. And the delta of every candle it can be displayed above that candle. Now, we chose not to do that or create a delta moving average on our trading chart because it doesn't really have any predictive value. especially if it's not placed in a smooth moving average. So what the order flow line does is it looks at the delta of the candle of each of the two higher time frames, and it places those numbers into a proprietary moving average. It's just a simple moving average, but it took us a long time to determine what the best moving average was. So it smooths the data real nicely. So you get a delta moving average, one for each higher time frame. And when that delta moving average is moving up on both higher time frames, then the line is going to go green. And when the delta moving average is down on both higher time frames, the line is going to be red. Now, this is a slide taken from an early version of the three line where we had red and orange, and we had blue and green. Since then, we've removed those. We've removed the indeterminates. This orange, and it's either red or green. But the delta moving average of the two higher time frames is a very powerful independent predictor of price movement on your trading chart. So when both delta moving averages are heading down, like let's say you're trading a 5 minute, so it's looking at your 15 minute and your 45 minute. When the delta moving average of the 15 and 45 is up, then price on your trading chart is almost always going to move to the up direction. And you can see right here, what I did was I took one line at a time, and we can simply look at price. And then we're going to go to a live chart, but you can see when the delta moving average, and this is telling you there's a significant abundance of buyers, overabundance of buyers on the two higher time frames, creating a positive delta moving average moving to the upside, and essentially that there's a lot of buying pressure on this financial instrument at this current time. It doesn't make a whole lot of difference what the financial instrument is. That's why we don't know, and it doesn't make any difference really what the time frame is. This just tells us that the only direction that we could trade is to the long side. And when price breaks resistance to the upside, we're going to take a long trade, and that's a 27 tick trade. Now, it just turns out that is crude on an 8 range. Now, here is crude again, but when the delta moving average is down on your two higher time frames, it's going to pull price to the downside. And that could be the only direction that you can trade. All these counter trend traders in these greenish candles, these are going to get run over. And I use some support resistance zones, but when you break support here and the delta moving average or order flow, and this really is, people have different definitions for order flow, but this is really what you're looking at. I mean, you're looking at how buy and sell orders are flowing over time, whether there's more sell orders or more buy orders. We do the assessment on the two higher time frames. You can only go short to support, and then you have no trade here. And as soon as order flow goes green, you can take a long trade. This is off support. I'm sorry, this is a break of resistance or break of support. Here's a move off of support. And then through here, you have to wait for price to come back up to resistance and then take a short and then wait for order flow to change so you can take a long. Now, if you try to trade against this line, I can tell you, you're going to have a lot of trouble getting a winner. What you want to do is take a very, very low risk, high reward trade. And it's the only way that you're going to get profitable trading futures. It's very difficult. Although this works on stocks, it works on Forex, it does not matter. You always are going to get these two delta moving averages. Here's order flow to the upside. You're sitting right on support. you go take a long trade up right up to resistance. Now, this is also going to help you significantly take a counter trend trade. 2 of the 3 trades I took today were counter trend, which are always riskier. But if you wait for order flow to turn, I mean, I got a gigantic counter trend trade, almost 5 points because I waited for order flow to turn. Now, here's price coming back to support, moving up. Price coming back to support, you know, you're looking for a long trade. To support, you're looking for a long trade. You can't take the short trade because order flow is long. You have to wait. The likelihood is if you take a counter trend here, you're going to get run over. And you have to wait for order flow to change. And there's your counter trend trade off of resistance, and it goes right to support. And then your next potential trade would be a break of support, which it does break, and then a move back up to resistance, and then a trade in the direction of order flow. So it's a unique indicator in creating a dual delta moving average and taking its cue on what's going to happen on your trading chart based on the abundance of buyers or sellers on the 2 higher time frames. And you can see this is just a simple MACD. And this is what we've decided in our modification to use as momentum. So this is line number 1. And what we do is we look at, again, we never look at anything that happens on our trading chart. We only look at the 2 higher moving averages. And we look for a price cross of the MACD across the signal line for a green and across down for a red. A cross up, green, cross down, red. And we look for that to occur on our 2 higher time frames. So it creates an unusual scenario that we can leverage that I'm going to show you for how we trade that first line, which is the momentum line. And I'll put it all together for you once I get all 3 lines. This is not going to be a long webinar because I'm not showing you an entire array of different indicators, but simply one indicator that does multiple assessments. And these assessments are pretty straightforward. So what I did was I combined both lines. Now you have to have momentum in the top line and and order flow in the lower line to align. Now, I'm going to show you what the definition of chop is. Now, if these are 2 equal independent forces that bring pressure on price to move in their direction, you're going to see what happens when they don't align. And if you've ever wondered from a mathematical standpoint what creates chop, I'm going to show you exactly what the definition of chop is now. Because if these independent forces that come to bear on price don't align, you're going to see that the markets are going to chop. So when they're both green, you know the only thing you can do is, if you're sitting on support, is take a trade long. If you try to counter trend trade these 2 lines, you're almost always going to get stopped out. And this is the E-mini. This is an enormous move. And remember, this is green because the 2 higher time frames are moving up. The MACD has crossed the signal line to the upside on your 2 higher time frames, and that's going to take price on your trading chart up. Also, order flow, the delta moving average of the 2 higher time frames, is moving up. There's an abundance of buyers in the market. It's sitting on the dome. It's looking at market depth. So you have to trade long. And you can see how you have these counter trend traders in these orange candles trying to counter trend trade the market, and they're just going to get run over. they're going to get beaten up. And what they're trading is oscillator divergence and MACD divergence. Now, we don't look at MACD divergence, but we do look at oscillator divergence. And I'm going to show you its analysis. Now, if you want to counter trend trade, you can, but you have to wait for both order flow and momentum to turn. Here again, momentum and order flow down. This is a very, very powerful predictor of price movement on your trading chart. Now, here's a period of time where there's non-alignment. And when they don't align, price almost always just chops. And when they finally come into alignment, price goes right up. And really is that, I mean, it really is that simple if you wait for a price alignment. Now you need price to be sitting on support. You need both parameters to align to the upside, and price is almost always going to rise. You try to take a short here, you can see why the short's going to go nowhere. Now, stochastic is the most complex assessment of all. Now, the indicator prevents you from having to think of a lot of things at the same time on the two higher time frames. And it took us a long time for us to create the stochastic line. For a long while, we just used order flow and momentum, and finally we worked out what has turned out to be a really, really excellent augmentation to create that third line of the three line. There are two things that we do that stochastic does for you on your two higher time frames without you having to track the movement of these two lines, the signal line and the stochastic line on the two higher time frames. And you can focus on your trading chart, looking for the best entries on a pullback to support or a pull up to resistance. What it does is this: when the market is overbought, it's always going to give you a green, it's always going to be programmed to tell you long. Here, when the market's overbought, it's always going to be programmed for a long. And then when the market's overbought or oversold, there is a potential for divergence. The stochastic line is going to go yellow, telling you to stand aside and wait. If divergence matures, it's going to go to red to tell you to trade short and to trade the divergence signal. If divergence never matures, then it's going to go back to green. So as there's a potential for divergence, the line is going to go yellow. And when and then the indicator waits to determine if it's going to mature and develop a divergence signal or whether that divergence signal is going to fail. So you don't have to watch for divergence. And you're going to see the way that we've configured it. It really, really helps you stand clear when there's the potential for divergence. And on a divergence entry, it's going to signal you to get in the direction of a printed out divergence signal. And you don't have to wait for it or watch it because it's looking on your two higher time frames, and it's only doing it in the overbought and oversold area. The one thing no one has ever done an analysis of is traders look for divergence signals between the 80 line and 20 line. And I found that those divergence signals fail often. But when the market is overbought or oversold, and the more deeply overbought it is or more deeply oversold it is, that's where the divergent signals become highly accurate. And that's the only time the indicator is going to start looking for a divergence entry. So now we've got all three lines. Now, when all three lines are green, it makes it really easy for you. You don't even have to look at the candles, because the candles get outlined in the default color that you choose. This is not a great default color. And you'll see a couple of other candles later. I changed the default color to make it more apparent. But you can see that this whole move up, the candles are outlined in, it's actually, it's a color that's not too different from the candle body. So it's not so obvious, but you can see these red candles are outlined in sort of like a pale blue. So right here on this pullback to support, you've got a great long trade. Pullback to support, great long trade. Pullback to support, great long trade. Now, when there's no alignment here, you have no trade. And then when you get the alignment again, and here you get a little bit of red here in the stochastic line, you get these two candles without any candle color. But here and through here, you're going to go long. Now here I moved it closer. Now what we found in addition, and this really makes us a sophisticated assessment, is that the MACD can be moving in your direction, the MACD line, but it may not have yet crossed the signal line. So that in order to get the candle to get outlined in a long color, the color that you choose, or the short color, the color that you choose, the stochastic line and the order flow line have to be the same color. If they're green and green and the MACD is yellow, it simply means that the MACD is moving in your direction, but it hasn't crossed the signal line yet. So this takes all of that assessment out, because momentum is moving in your direction, but it has not yet crossed the signal line. But the candle color outline understands that. And as long as the second and third lines are green, it will start creating this halo on the yellow MACD line. So you're going to get an up color with green, green, yellow, or green, green, green. And any of those three are powerful predictors of price to the upside. Here again, this is a different analysis, but again, a movement to the upside only. And here I changed the color to give you a better idea of the candle color outline. Now, I'm not going to say you almost always have to trade in the direction of this indicator, but I'm telling you, if you try to counter trend trade it, the likelihood of you getting stopped out is close to 100%, because you've got a multi-time frame assessment of order flow, which is the bottom line. And when the delta moving average of the two higher time frames shows an overabundance of buyers, you have to go long. When the stochastic line, which is the middle line, has crossed its signal line and is heading up, or is overbought without divergence and is green, you have to go long. And when two MACDs on your higher time frames have crossed the signal line and are continuing to head up, you must go long. So all you have to do to take your cue as to which direction to trade is simply look at the outline of the candle body. You don't even have to pay that close attention to these three lines. this is going to tell you what direction to trade. And it's going to tell it to you with tremendous precision and tremendous accuracy. Now, I just put this up because this is our entire system. And this was a trade that I took today, right off the value area high. You can see how I've coded the color around my candles. And you can see this is the 3 line. It's green, green, green. And this is another indicator and another indicator. We're not looking at the whole system, but I wanted to show you a real live trade. And this was 124, which was today. And what I did was I took a long trade right off support in the direction of the 3 line, and it got me a very, very easy winner. And you can see here, the colors of the 3 lines start to break down. You can see these candles are colored in nothing. This is black, 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 and black. And when they start to break down, that's when you have to stand aside. And you can see right here, as soon as the 3 line, you've got green, green, green on the 3 line, price on your trading chart starts to move up. Now this green line here is our signal for high of day. This tells us that price is right at the high of the day, so we have to be a little bit careful here. But this is your terrific long trade in the direction of the 3 line on a live chart. Now what I wanted to do was take these down, if I can, and bring up, I didn't boot my NinjaTrader. It's going to take me 1 second. Let me bring the slides up while it boots, because I want to show you the indicator work in real time on our charts. It's all great, it's all great to see slides, but and what I can do is I can talk to you really briefly about order flow. If I can find some slides, because I have a lot of order flow slides here, and let me see if I can find them. I mean, this is a completely separate indicator, and I don't see. Here's the slide that I wanted to show you that I didn't get a chance to show you. Here is the delta of each individual candle. This tells you when on each candle whether there's an overabundance of buyers or an overabundance of sellers. The problem is this number has a lot of throw weight, but each individual candle number does not. You can see this is an up candle with a negative delta number. So in order to make the delta a really powerful predictor of price movement, you have to take this number, put it in a moving average, and take, say, a 15-period moving average. Looking at the average of the last 15 delta numbers to create a real powerful signal telling you the direction to trade based on whether there's an overabundance of buyers and an overabundance of sellers. And a lot of traders simply look at the raw data placed at the bottom of a chart based on each candle derivation. And that is simply not going to get you where you want to be. What you want to be is to put this in a smooth moving average. And the other thing is, I mean, one of our philosophies here at Rightline is any indicator that uses data from your trading chart doesn't have any forward-looking ability. It tells you where price has been and what has moved price in that direction, but it doesn't tell you where price is going to be out into the future. In order to do that, what you have to look at are the 2 higher time frames, because that's the direction that price is going to move. So that's why none of the data from any of the indicators we look at on our platform use any data from the trading chart at all. And that's why the 3 line is looking only at data on the higher time frames. All right, now this is our system booting. And we have a trade analyzer, which we don't use on futures. We use it on stocks, and we use it on Forex on the full system. And it's just looking at the 3 line. And you can have it for stocks set up on 105 different stocks. And when the 3 line aligns on a given stock, you have the potential for a really good trade. Only we're just looking at this indicator. So let me just let the 3 lines come up. And this is the slide that I showed you. So let's just wait 1 second because Ninja's coming up. That was our first. I had so many charts running, and today was a great day to trade because there was tremendous volatility, and anytime there's huge volatility, it's always a great day to day trade. And we're almost there because the control center is open. And I just don't want to drop the slide. You're going to be looking at a blank chart. And I should have booted this before we started, but I've been suffering from this awful cold, and I have not been able to shake it for the past 10 days. You know, we also have a market profile of each individual candle. You're going to see that, but that's a completely separate system. It helps with precision a little bit, but the key really is the 3 line, is the order flow, stochastic, and momentum on your 3 higher time frames. Without that, you really don't get a real precise directional bias. And the one thing that you don't want to be doing is counter trend trading in the opposite direction of that signal. Now let me see where we are here. We should have more. We should have more of those. Here we go. They're all going to start coming up in order, and then I'll show you the charts. I mean, really, you know, the proof is in the chart. It's not in the slide. And I hate to see a webinar where I only get to see stylized charts, because really you can sort of cherry pick what you see. But I'm going to show you how the live chart aligns with price. Now we've got 2 charts. We've got the Russell and crude. We don't look at the Russell. We don't trade it, only because of the fact that it's got such real poor liquidity. I mean, I love the Russell, but right now it's only trading 20,000 contracts a day, and it's just too illiquid and too lightly traded to really get it to be a good trading instrument. Now, I trade crude in the E-mini, and those are going to be the 2 charts. And actually, I made another chart that has only the indicator that we're looking at, and I can put up any instrument that you like. I can open up the chat window, and if you want to see a market, I'll be happy to show it to you. When we look at the E-mini for the day, we can look at crude for the day, and we can see how well it's going to give you a direction. Now here come these are the currencies. Now these are the instruments that are all on our auto trader. There's the 6E. And they're coming up one at a time. I don't know why they're loading so slowly. I really apologize for this. You know, there's all different ways to analyze the same data, and it's really what creates a really great indicator is how it uses the data. If you just look at a stochastic on your trading chart, you're not going to get any ability to determine how price is going to move out into the future. And what we need to do is we need to predict out into the future. And the trouble with most indicators are they're not leading, they're lagging. This indicator is a major leader because the direction of the 2 higher time frames is the direction that your chart's going to take. But you have to look down, you have to look inside that in price movement on your higher time frames and look at these 3 parameters, and they will lead you really nicely in the appropriate direction. Now let's see if the charts have come up. I'm just going to leave it blank here because they're going to come flying up here in 1 second. Here they come. Still seeing that's a piece of my son, but he's going to disappear. All right, they're just about booted here. Just waiting for them. Here we go. And there we are. Now, I don't want to look at the full system. Let's just look at, where's the chart? Here's the chart that I made right here. And we can change the instrument. So we do a pretty big analysis. And let's take a look at price on our trading chart based upon how the 3-line predicts price movement. Now remember, it's really important to remember, and I just want you to keep this in mind, that this is not looking at any data from the trading chart at all. So, if you have an oscillator, when price moves up, the oscillator moves up. You have a MACD on your trading chart, when price moves up, the MACD moves up. This is only looking at price on the higher time frames. So it really does have future predictive value. And you can see the trades that we got, that we were done in the room. But you can look at crude right here. Any pullback to support with all 3 lines green gives you a great trade to the upside. And one of our rules, right, is that's a 29 tick trade, is that we wait for this modified 15 to cross the 50. We want it to be on the side of the trade that we're going to take. So this is a move, and I'll show you what the kind of move it is. Now our software actually does this for us. This is a trade in consolidation right here, but you always know from looking at the 3 line that you are not going to take a trade short. And both of all the traders in these 2 red candles are almost always going to get run over. And what they're going to do is they're going to help propel this trade up, because as the trade moves up, they're going to get run over. And then as they start feeling the pain, they're going to close their positions as they get stopped out, and they're going to have to buy back their contracts. Now, on this move up, on this pullback and this move up, we couldn't get it. The 3 line had not turned. We had our order flow line red. So, I mean, one thing I can also tell you for sure, you're not going to get every move. But the goal of this line is to keep you out of bad trades and to get you into winners. This was a move back to support and a continuation up. Just didn't get a signal for that continuation up. That's all. And you're not going to get every winner. I mean, that's impossible. And here's another winner right here. It's a break and retracement. And you're almost always going to get a move down, because all 3 lines are set up. And if you go right to the candle that creates the first pull-up candle, the first green candle, that's 25 ticks. Now, this is a trade you can't get. You have to get in right at the start of the trade. You can't chase it up. The 3 line didn't turn fast enough. But right here, although I think this market is a little bit overbought, you see you have a long signal. I'm just telling you personally, I wouldn't have taken it. And our overbought, oversold signal is different. But you can see on a move into support with the 3 line in your favor, up you go. It always prevents you from taking a trade in the wrong direction. Now you see it was just a little too slow. Now, one thing I do want to mention is that when you close an open NinjaTrader, because of the way the system is coded, it creates the 3 line is slightly different, and it moves 1 candle to your right. Now, I believe that in real time, This would have been the first candle colored in green. And that would have given you this whole long trade. And the reason that happens is in real time, Ninja looks at the previous candle and the one that's forming. When you close and reopen, it looks at this candle and the next one, which hasn't formed yet in real time. So it shifts the analysis one candle to the right. This would have been green, one more candle to the left, give you triple green and given you this move up. And here's another move right here. All based on an analysis of the higher time frames. So, I mean, you could just eat crude oil for lunch today because you've got all these great moves. And we'll do it on different instruments. Another pullback and move up in the direct. And you see it does not fail. Except sometimes it does, doesn't always work. And you can see here on the analysis, it stayed red. It hadn't changed. And it was a pullback to support. It's usually a multi-candle back to support and a move up in which the 3-line doesn't turn fast enough. But these multi-candle retracements are very dangerous. What we want to take are these single candle retracements back to support, confirmed by the 3-line, and then a move up, just like that. Let's move to the E-mini. I have a bunch of stocks on here. Here's the ES. And let's change it. I trade that on a 5 range. We got great trades today on the E-mini. Huge trades. And let me just go into the 3-line. Okay, everything's set. See, I have it as dark orange and green. And it reads the 5 range and is looking at its assessment on the 8 range and the 13 range. Now, early on, I'm not skipping this. This was a complete crash I could not get. I mean, I was trading at the time, and I can see that the analysis has really changed somewhat from the time that I looked at it in real time to the time I opened and closed. But here was my first trade right here on the E-mini. And that went 2.5 points. And that's exactly the amount of points I got on the trade. Was 2.5. Now, I took this counter trend trade. See how the candle is outlined in orange? It was also at the high of day, and it was also at a pivot. So I took the counter trend trade. And this trade went 3 points on the counter trend. Remember I said you just wait. The MACD, if it's yellow and you have red, will still give you that counter, will still tell you the direction. It was just waiting. The MACD was heading down. It just hadn't crossed, and it never crossed, but it was moving in my direction, and it allowed me to get this really, really nice counter trend trade. I couldn't get that one in real time. I did not get a red candle. And then there was an early trade that I got. I had 3 trades on the E-mini. I have to remember where it was. It may have been after this. No. Once the market collapsed and made this gigantic move down, there was a 3rd trade I got, and it was early on, and I can't find it. I don't know where it is. It was another counter trend trade. And, oh, you know what? It was here. Now, in real time, this was surrounded in red. This analysis was moved 1 to the left. I mean, you know, this is all I can tell you, but I can guarantee, I can promise you that this was a red candle. My problem was it wasn't to support of this 15, but I really liked the setup, and I didn't get all of the move because it stuttered me out. I mean, one of these wicks took me out on the trailer, but this went 4.75 in the direction of the 3 line. Now, counter trends are always more dangerous than trend trades. But I had 1 trend and 2 counter trends, always in the direction of the 3 line. And I got 4.75, 3, and 2.5. Now we can look more. And this is the kind of trade. This is yesterday, 123. I mean, you can just back the truck up to the bank. Remember, order flow, stochastic, and momentum are all heading up on your higher time frames. And this is a single candle retracement right back to support on green, green, green. This is going to be the lowest risk, highest reward trade you could possibly get. And the best time to trade is when the 50 is yellow or green, but the key is this is a modified 15 period, and it's more than just a moving average. It's an indicator because it's combined with an ADR ADX component, and that ADR ADX component is a component of volatility. So in order for this to be green, it's assessing on your trading chart. There's a lot of volatility present, and we pretty much ignore price when it's moving along a yellow 15 because it means that volatility is not going to set us up for a low risk, high reward trade, and that's all we're looking for. And here's another one right here on a pullback to support, single candle. And there's the continuation trade up. This is at 9:39 in the morning yesterday. Now remember the trade. For 4.25 points. Now this kind of move you can get because there's your counter trend in the direction of the 3 line. It's outlined. And if you took it here, remember, you have 2 reds in a row. What you always want to take is a move up and then a continuation down. And here was your entry. And also on a 5 range, you have 5 ticks of selling power here. The bulls, the bears do not allow the bulls to create even a wick on this move down. And you can see, now I remember I took this trade off at the 50. Because I didn't anticipate that we would break it. And this trade went all the way. Now this is another trade. I mean, I could do this all day. And I'll show you a few other markets. Here's another trade. Now, listen, I haven't looked at this before this. I mean, I'm just showing you what price is doing. We can look at another market. I mean, it doesn't make any difference. You're going to get the same results on this 3 line. It really is that powerful. I don't want to look at the Russell. I can look at the Russell, but let's look at, I don't know. We'll look at gold. Gold is hard to trade. And let's go to an 8 range on gold. Now you can trade this on any time frame. You can use it to swing trade on a 4-hour candle. It doesn't make any difference. Whoops. The same setup and same signals are operational. Don't think that that you're constrained to any specific time frame. There's gold. Now here's a pullback to support on a yellow 15, but you've got the 3 line in your favor. And when order flow and stochastic or momentum are in your favor on this pullback, there's your first long candle, and up you go. And that's and these are real big trades. Here is the candle you get, and there's the move up. There's the retracement, and there's the move up. This is a small winner, but we have a 5-tick first target. Whoops, I'm sorry. I knocked it out, but I think you saw it. Here's another one, and up. Here's another entry, and up. Another entry. I mean, this is a whole day. This is a $600 or $700 setup right here, and you're done. And you see on these candles, you have no setup, and price goes nowhere. As soon as the 3 line kicks in, up goes the market. Now, these first 2 candles are black. You don't have the 3 line. You can't take the trade. You're not entering in the middle of a trade. Nothing can guarantee that the price is not going to pull back to support. The 3 line's still going to stay green, and price is then going to rise. You have to take it off a retracement off support. And here's another trade. Retracement back to support and a move up. Now here's the first retracement we found that didn't go all the way. It goes up. If it didn't hit your first target, it's going to retrace back to support, and then you're not going to get stopped out because your entry, your entry is here, and your stop should be 1 tick below your entry. It doesn't even come close, and then you're going to head up to your winner. On the short side, the same thing. There's your entry. This actually is going to hit our first target. Then we're going to have to re-enter here, get a first target. Then we're going to enter here, and it's going to give us some heat, but it's going to take us all the way down. No loser. And this is the middle of the night, I think. We're not going to trade it, but the signal works, and up you go. So let me see if there are any questions. It's really just, I mean, I know you may think that I'm making this up as far as being easy, but it really, really does create a very important market direction. There's only a couple of other things that you have to be careful of, and they're very simple things. You want your 50 to be green or yellow, and you want the 15 to be on your side of the trade and be green. And you want to take a long on a pullback to support and a continuation up. I mean, that's it. And if you follow those rules, the 3 line will always get you into low risk trades. There's a pullback. Now on the entry, you get it. Now what happened is you probably had a divergence signal here, but it failed. I mean, it clicked in, the stochastic went red, but you were already in the trade. The divergence signal was run over, and you got a winner. Here, you're in the trade, and all 3 lines stayed green, and up you went. So it does watch for divergence, and if that divergence signal did click at the time you're going to enter, you're going to lose the candle color background. You're going to lose the candle halo color, and you're going to stand aside on the trade. But once you're in it, it's just going to fly up for you. Well, you'll hope it's going to fly up for you. There's another winner to the downside. And remember, I mean, my last point is these are not green because the market's moving up. These are green because the 2 higher time frames are moving up. And the delta moving averages are green on the 2 higher. Stochastic is moving up on the 2 higher with no divergence. And the MACD is crossed to the upside on the 2 higher. Price on your trading chart is going to follow. So it makes it a real, there's your short trade. I mean, this is a tremendous short trade right here. The 15 just crosses the 50. You want to trade on the same direction. There's your retracement and continuation. Now, this is your continuation, and you may have gotten top ticked out of this trade, and this may be a loser because this wick may have actually taken you out, but then you go right back in and make it right back. So, and look at them, and look at the long move. So now here's chop, where none of these things align. And it tells you, don't even think about taking a trade here. Because everything that's here is an extremely high risk entry. And if you're just a price action trader, let me show you something. Here's sequential lower highs and sequential lower lows. And you can take this short right here. And it actually turns out to work. But it's only because you get the third sequential lower high, the fourth sequential lower low, and the break of this candle to the short side to give you this move down. Now, this would not comport with our rules because we need the 15 below the 50. But if you wanted to take it, stretching that, you could take it because you have this long falling channel and this long falling channel and out. So that's the system. Now, let me just let me show you what we're offering it to you for as this webinar special. Let me get my slides back and move them over. No, I think there is a link if you're interested in it. It's our version 2 3-line indicator, and it's not $4.99. I'm sorry. The person who made these slides up put it in wrong. It's $3.99. I'm not going to bother to try to fix it. Let me change it here. It's $3.99. And the first 10, there's over 150 people in the room. Get 2 months in the live training room and a 10-week educational module series with it. So they get the version 2. You're going to come into the room and trade with me. And something's going on behind us on the live charts. They're really moving because I don't know if you can hear it, but they're signaling. Oh, now the only thing I want to add is that when you get the candle outline, it also gives you an audible alert. So since I have about 15 charts up, I'm getting a lot of beeps right now. So that's the system. It's normal. I mean, that all of this added up individually is $21.97, and it's $3.99. And the offer expires on Friday night. And the first 10 get these 2 additionals, 2 months in the room, and the 10-week educational series. So let me just put up our phone number and let me see if there are any questions. Okay, there are. Okay. Okay, Patrick says, I'd like to go over the settings. For example, okay, here's what's going to happen if using a 2 range, Patrick. It's simply going to default to a 3 range, and it's going to make you an assessment on the 5 and 8. So if you're trading a number that's in between a fib number, let's say you're trading a 2 minutes. Well, on minutes you're fine, but if you're trading a range or a tick chart that's in between a fib, it's going to default to the nearest fib automatically, and then take the assessment on the 2 higher fibs. So that's what it's programmed to do. If it doesn't see a fib number, it's going to seek out the closest fib number and use that as part of its analysis. Hey, good evening, guys. Good evening. Well, we took out blue, Fitzroy. Right now, it's only green or it's only red. So you don't have to worry about the green. Correct, Gord. I mean, you put that really well, and you're right. What Gord says is that the delta shows the aggressive buyers or sellers, since there always has to be a buyer for every seller, but it's the aggressive buyers who lifts the offer and the aggressive sellers who hit the bid. And you're correct, Gord. I mean, you put it very, very well, and that's correct. Very nice. It's both for an NT7 or NT8. Once only, Daniel. And if you purchase, you get all upgrades and add-ons to that indicator for life. And you never pay another fee. You want to see the RTY, Leon? I'll come back to that because I have to go back to the platform. I'll show you the Russell. Okay, crude we did. It doesn't work on e-signal. I'm sorry. You know what, Discarding, I got so many things. I should have loaded them prior to the webinar. I'm sorry. James, when you say what operating system are you using, are you meaning the platform, underlying platform, James? Whether it's NinjaTrader or Sierra, because we also work on Sierra charts. It doesn't work on Thinkorswim. I wish it did. Okay, Daniel. All right. I want to show a 1 minute, and I want to show the Russell, and I will show you those, Daniel. It doesn't, Fitzroy. It doesn't lag. You have to look at the higher time frames. I showed you all the trades today. Today we had a great day in the live trading room. We had 3 trades and 3 winners. And as long as we have volatility that we can trade, it's going to give us a good signal. Like I said, it's not going to give you every single entry because sometimes you're right. It takes a longer period of time for the longer term time frames to move in your direction. But it's very, very precise. And when it sets up, it gets you a winner. And look, anybody who's looking for every single winning trade is never going to get it. What you want to do is when you get an entry, you want to make it successful. And that's what this does. It's being recorded, Mike. Can you show some stocks? I can. I will show some, Fred. So I'm getting more things here. I will show you. All right. You know, I'm the only person here, so it's a call, but I can't pick it up right now because I'm in the middle of this. Rory's on honeymoon, and Sergio's left, and no, that's the visual alert, Wouter, and then it also comes with a beep. The kind of beep you can pick. It's either that the audible 1, audible 2, audible 3, audible 4. But that halo around the candle occurs intra-candle. It's not a candle close. So you can see it forming in the middle of the candle, and then you can get your buy stop or sell stop in 1 tick above the close of a long trade, 1 tick below the close of a short trade. And I'll show you the trades that I took in real time. I don't mind showing them to you. The Giscard, I like on the E-mini for it to be 2 ticks off the 15. On crude, I'll give it 4 ticks. On a 5 range, I want it to be 2 off support or 2 off resistance. On an 8 range, I want it to be optimally 3, but I'll take 4. I want it to be very tight because I don't want the trade to come back against me. Pull back tighter to support or tighter to resistance, and then potentially stop me out. And sometimes it costs me a trade, but I'd rather trade the lowest risk trades. It doesn't, Fitzroy, I'll show you today's trades. It doesn't work on MT4, John. I'm sorry. We're now working on the whole MT4 platform. That's our next. We have so many people who ask us about MetaTrader, and we just don't have it on there yet. It's for Ninja 7 or Ninja 8, Cedric. It's for NT4, NT8, or Sierra. The moving average numbers and what the 3-line indicator below. This is the update you're getting. It is, Fred. JA, I'm not sure what you mean. Can you explain the moving average numbers and what the 3-line indicator below is? I hope I just did that, JA. If you came in a little bit late, I'll just do a quick recap when I go over the different markets. If somebody wants to see the Russell, somebody wants to see a 1 minute, somebody wants to see stocks, and I'm going to project all those. You're getting it tomorrow morning. Just, Mike, just send me an email and you'll get it in the morning. You know, these are traders who own the 3-line. They get the upgrade for free. No, it doesn't, Leon. It doesn't come with all of that's the whole platform. This is just a single indicator analysis. So if you're looking for the entire platform, you'll have to call me. I'll show you the 290, Stephen. Not a problem. I mean, I got a lot of requests here, but I'll show them to you. Yeah, you can use it for stocks. Definitely, I'm going to put some stocks up. Let me see. Okay. You can, Wouter. You can. I'll have to give you our PayPal. You just send me an email. I'll send you a PayPal link. Not a problem. You know what, Paul? We just rolled it out. I don't have any videos on this new line yet. We just put it up a couple of days ago, so I don't have any YouTube videos yet for it. I mean, I'm going to make a whole bunch, but after trading it, it just is really a joy in terms of trading it. And I'm going to show you some more markets. I thought Sergio put it in the room. If he didn't, I'll put it in a minute. Sure, you can put it on a desktop or a laptop. Absolutely, James. It is recorded, Stephen. Listen, Daniel. The market does not move in any exponential fashion. You should never use any indicator. Should never use an exponential moving average. These are all first order assessments. And the movement of price on any movement, the price movement on any financial instrument is a first order type of movement. This closed system is a first order system. You should never use an exponential. An exponential was invented by a lunatic who didn't know what he was doing. If you want to take the market as X and square it and take an exponential moving average, why would you not take an X to the cubed or X to the 4th or X to the 10th? You have to look at everything as a first order independent variable. And we never look at exponentials because they simply don't operate in real life the way price does on a trading chart. So we never look at an exponential moving average. It's a big mistake. James, if we want, we'll allow you to do that. You just have to call us up and we'll authorize you to do that. And James talked about putting it on 2 computers, and we will give you a second license. Yes, that's right, correct, Paul. Hey, Fred, Roy hasn't had a vacation in 2.5 years, and he got married, so we had to let him go. Yes, it's a one-time fee, guy. We don't do that kind of thing where we charge you. We keep charging you. We make an upgrade. We charge you again. We do an add-on. We charge you again. You have a lifetime license, and anytime we improve it, we're always looking to try to improve everything. you always get the updated version. And a lot of questions in the room were traders who own the older version of the 3-line asking me if they're going to get this new version, and they all are. No one's going to pay us anything for getting this upgrade at all, and you won't either once you get the indicator if we do upgrade. Email is info at, it's right here, info@rightlinetrading.com. Here's our phone number. Just don't call me while I'm on here because I'm alone in the office, which is rare. I always have Rory, and I just hired someone else named Bruna, who's from Brazil, who won't be starting for another 10 days. But it's just me and myself. Yes, they get this upgrade for free, Jaskar. That is correct. If you own the 3-line or you own the whole system, you get every indicator we upgrade for free. That's been our company policy since the company started 4.5 years ago. We never charge for an upgrade or an add-on, ever. There is a scan to find the stocks, Josie. It absolutely works on a Mac, Josie, absolutely. Now let me quickly show you the things that you asked for. Now the first thing I want to do, if you give me 1 second, I want to do one quick thing. Let me take this off over here, and then we're gonna move to stocks, and we'll move to the Russell, and I'll show you a 1 minute, and we'll do all those things. So just give me 1 second, because I want you to see how powerful it is. I mean, I don't like, and I go to webinars myself, and I don't like a webinar where all I get to see are a bunch of slides, because then I can be shown pretty much anything that the developer wants to show me. And that doesn't do me any good. Hang on 1 second. All right, I'm going to put.
This is Nick here. Right now I'm in Australia and I'm trading during the European.
All right, hold on 1 second here. Okay, now let me put this in the room. Hey, good evening from Belgium. I'm trying to get this to click in, and I can't. I mean, when it comes to tech stuff, I am so bad. All right, there's the link. There's the purchase link to the right. I hope you can see it. I made it available to everybody. So let me just go to the hang on 1 second here. Okay, thank you, Walter. We'll send you the PayPal link. Hang on 1 sec. No problem, Fitzroy. I know you from way back, so we're good. There we go. And here is send to all. Okay, so there it is twice. That everyone should see it. Now, first, let's look at the Russell. Here's the Russell. I'm not getting any data for the, okay. Here's the reason why. Hang on 1 second. I have to change the Russell month since we don't use it. That's an old month. And let me change it. Let me put March in, which I just did, and take out this. And now we'll be fine. Hang on 1 sec. The Russell's going to trade real nicely with it. The problem for the Russell is just simply liquidity. Here's the Russell. I mean, this is today's Russell, pretty choppy. And there's a trade right here. This is at 1332. A nice long trade. And there's a beautiful short trade. Move down, retracement, signal. Beautiful trade, short. And look at that short trade. That is, this is one of your take them to the bank trades. I mean, when you get a pull up like this, and this is when the market, to me, I call it turning the corner real quickly on that modified 15. It breaks it, it retests it, and then continues down in the direction of the 3 line. I mean, that is a full winner. I mean, that for us, that's a $400 trade. If you have the trade on a trailing stop with no target, that's 53 ticks on that move. I mean, you don't need a whole lot more than that. Now, we finally found a trade that didn't work. Here's a loser. Right here. It's the first one we found. No follow through to the downside. And that's an entry. So that's honestly the first bona fide loser I've seen. And that is an entry and loser. And that's it. Nothing else. You can't chase. So there's the Russell. So somebody wanted to see a 1 minute. So let me quickly let's reconfigure. I mean, we'll figure crude oil on a 1 minute. And let's change it. We'll go to 1 minute. Now that is a fast chart, especially on crude. And let's see what we get here. See, here's an entry right here. You could have taken the entry here. Neither one of those would have stopped you out. And there's a real nice winner. Here's another nice winner right here on the 1 minute. Here's an entry right here. Well, you got to be on your toes to trade a 1 minute, let me tell you. And see, I think in real time you would have gotten this. I don't know for sure, but you've got the entry right here on a 1 minute. And there's your trade. Great trade on a 1 minute. Here, just didn't get the signals. Didn't come in. I mean, you actually have a trade right here. Well, no, you don't, because you don't have a retracement here. That's just a solid move up. There's nothing here. You can't trade any of that. Look at that entry. Now that arrow is from a different chart, a different trade, and it sets up on the 1 minute to give you this tremendous move. Here's another trade on the 1 minute. Now, I don't know what your automatic trade management strategy is, but there's your 1 minute trade. And there's another trade on the 1 minute right here. Long. Here's your 1 minute. Well, this is hard because the 15's below the 50. It does violate our rule. So you'd have to take this trade right here. There's your retracement candle. Here's the continuation, and you get that move up. Now, so far, we haven't found a loser. Down, retracement. Here's a loser right here. Well, it's right at 930. Here's one loser. No continuation here, but it's right at the market open. I don't trade crude right at the market open. Here's another winner. And believe me, I'm not going to tell you you're going to get 100% winners. But if you can get 75 or 80 or more percent winners, you're in good shape. Here's where everything goes green, but you need a pullback to enter, so there's no entry here. Here's your entry right here on a pullback and continuation. And if you stay in the trade, you're going to get a little bit more up to here. It all depends on what your ATM is. And here's your trade right here. Here's your pullback candle, and here's your continuation trade. Again, based upon your ATM, you can get this whole move all the way to the upside. Every single candle in this move is encircled in green. Every one. This 3 line remains intact throughout the entire move. So actually, you can actually get the trade up to here. It all depends upon your risk management. So you can see a 1 minute's going to give you really nice signals. So let's put in some stocks. I'm just going to put in 2 because I don't want to make this get too long. I have a whole bunch in here. I'll put in. I don't know what stocks you want. Let me see here. I'll put in NVIDIA. Now I don't want to put it on a 1 minute. Let me put NVIDIA on a 13 range. And even that may be fast. There's the 13. Let's make the bar width a little bit bigger. Here's NVIDIA. But if you trade a 1 range, you're going to have to really be on your toes, but you're going to get the signals. Now, here's NVIDIA. Now, I just have to, since we change instrument, I just have to change the wick outline so you can see where it is. And that goes to 5 and 5. That's all. So we can see what color it is. Now there's a move on NVIDIA right here. Now here, this is a loser. And that's a loser. Now, 13 may be too fast. I don't know. There's a winner. There's the move up, the move down. There's another winner right here on the continuation. Remember, we're not looking at small biotechs here. This is really day trading a stock, volatility of a stock. Now, here's a winner right here. Here's another winner right here. You're just taking pieces of NVIDIA. If you want to trade a much longer time frame on NVIDIA, like a 2 minute or a 3 minute, we can look at it. But here's another entry on NVIDIA. Here's another entry. You're going to get a ton of entries on this stock. Here's another entry. Now, this is also an entry that just doesn't make it. No, I think a 13 is too fast. Let's go to a 21 range. Just too much. The stock is too expensive. Okay, here's a winner right here. Here's one right here. Now, I have not day traded NVIDIA, so I'm just guessing. Here's another winner right here. There's a winner right here. This does not have the candle body, so we can't count it as a winner, but it's a nice trade. just don't have the surroundings. I'm telling you, it works really great. Let me try one other stock that doesn't have so much volatility, except the ones up here, the ones that I put in. Let's look at Xilinx. And I love Xilinx, and I've held it often in the options portfolio. Let's try a 13 range on Xilinx. There's a winner right there. There's a winner right there. If you took this trade, well, you can't take that. You need to take a retracement and continuation. Okay, that's the day. Here's one trade. Two trades. That's a very, very big move on Xilinx. Two trades. Now that's a trade. I don't know where your first target is on NVIDIA, but you've got almost an entire candle. I don't know if you're going to want to get two candles. This is about 12 ticks. It's only a 1 tick candle body. So that's it. So believe me, it works just as well on stocks. With stocks, though, you have to do a little bit of work and determine the speed. On futures, I know all the speeds, so it's very, very easy for me to do that. Okay, there's just a few more questions, then I'll finish. Okay, these are all good questions, and I'll just answer them quickly. Okay, hold on. Yes, Bob. When the new one is running, yes, Les, you will get this upgrade. You haven't received it yet. Sergio hasn't packaged it. It's going out in the morning. Just send an email to info@RightLineTrading. Les, anybody else, we'll send you the updated software package. Bob, just send us the upgraded. No, you can't run them both, Bob. They'll drive you crazy, and this one is a much better version. The moving averages, Daniel, this is simply a 50-period moving average. It's all it is. And the only thing that we did with it here is we just colored it with a slope degree. You see this line slope of 2 to give us a really visual, so we can visually depict whether it's moving up, whether it's moving down. That's all. It's just a 50-period SMA. This is a proprietary 15. If you're interested in it as part of this package, you'll have to send me an email or a call, and I will add it just at a small additional cost. It's one of our cleverest and most effective indicators we have. We call it the 15-period trend, and it's an amalgam of a 15-period moving average and an ADR ADX line. So when it goes yellow, it's an assessment of volatility and does the assessment on 15 periods, 15 prior candles. And when it's red, and when you get red and red, you've got a great period to take a short trade. When it goes yellow, it always increases the risk for a trade. You can still trade. Now, somebody also asked me, would I trade a candle that didn't have any outline? You can, but remember, everything that you do, it is based on an assessment of risk. If you want to take the lowest risk trades, you're going to wait till the 3-line aligns, and you're going to trade those only. So my recommendation would be to only trade when the candle is colored, because then you have an alignment of these 3 individual forces that move price on your trading chart. So yes, you can, but you're going to do it, I think, at the price of precision. And precision really comes down to the number of trades that you take that win. And your win percentage or precision is going to be increased if you trade in the direction of this line. And you can see in real time on Xilinx, you're going to get your best trades when these 3 forces align right here. And when they're moving in all different directions, you're much, much more likely to move and chop. Look at this. And momentum is yellow throughout the course. This is red, green, red, red, green, red. The modified 15 You can only take a long trade. It's above the 50. Here at the 50, when the 50 and the 15 converge, it's not a good time to trade because you want them to separate with slope. And there, look at that trade. Terrific short trade. Get consolidation right into resistance in the direction and down. And on these, down, down. Winners, winners. And sure, you can trade black, but if you do, you're going to accrue significant additional risk. That's all it's about. And somebody wanted to somebody wanted me to show the live trades today, and I'll show them to you right now. I took them all this morning. They're all on the E-mini. Here was trade one. Remember I told you we got a 4.75. I took this. Now in real light, in real time, this was surrounded in red. Trust me, or I would not have taken this trade. And I'll show you something else too. And the reason I took it. And you see the reason I've got this scalar on it and this blue, because this was an entry. And this had an alignment in real time that we lost when we closed and opened. We had the falling channel. We were trading into support, but look at that move. And that was a real-time trade I took live. I took this long move, 2.5. This was a little bit risky, but this was a double top. And this was a pure counter trend against every single color. And it was a very, very risky trade, and it went a point. It just hit my first target, and we have one more right here. Here was the counter trend in the direction of the 3 line. Again, falling, falling, and the trade went right to support. It went 2 and 2.25 points. Those are my three. Those were the trades. 1, 2. Very risky trade. I shouldn't have taken it. I was lucky. I got out of it with a winner. And there was the monster break of the and that candle was colored red. Just like I'm telling you, this candle was colored in the wrong direction because I want. Listen, if you think you're going to get a counter trend move at the inception, you're trading against every indicator, thinking that everything is going to turn. And I should not have done it. But it chopped down. It got me my 4th tick for 1 point on my first target. And then this one, I had the 3 line with me, and it just collapsed. So those are the 3. I had nothing on crude today at all, with no trades. And then after that, I watched in the trading room as this thing just took a complete nosedive and collapse, and then we just closed up. We made plenty of money. So that was it. So I don't know if I can be more transparent than that. So what I'm going to do is I'm going to render that. Let me see if there are any other questions. My average stop depends on the size of my candle. On an 8 range, the stop should be 1 tick below the close, one tick below the close of the low, and your entry is 1 tick above. So it's always going to be 10 ticks. On the E-mini, it's going to be 6 ticks. Because what we do on the E-mini is your stop is going to be 1 tick above the high on a short. And your entry is going to be here. But we have a special platform that allows us to take this 1 tick pullback and get in on a 1 tick pullback here, this wick. So our stop is 6 ticks on a 5 range. And we're looking to make $300 or $400 on that. Maximum loss, we trade 3 contracts, I think is $300. We're looking to at least get a 1-to-1. That's the most you can do on a leveraged instrument like this. The most. That's the stop, John, on CL and ES. 10 ticks on crude, initial 7 on the E-mini, but that comes right back to 6 when we get our entry. So we steal a tick from the market, which is a real big deal and really helps us on our trading. Okay, Stephen wanted to see the NQ 290, and I'll show it to him. Let me put the NQ up. Now, I think the NQ is one of the most difficult markets to trade. Here it is. And you want a 290 tick. Here's your 290. And here's a chart. Let's move to the meat of the day here. See, I don't know how much, I mean, obviously there's a lot of candles, and I don't know how much of these, I don't know what the color is going to be, but there's an entry right there. And you've got this whole move here. Hang on. Here. That's colored green. You can't take it. There's your move right here. And down. That's a pullback candle, but the 15's below the 50. So you don't have a trade. And this is straight down. This pivot, I wouldn't trade into the 15 here. I mean, this is a lot. There's an entry right here and down. I'm just moving. I'm not bypassing losers. There just aren't any trades. There's your long entry right here. And depending upon your automated trade management strategy, you should be able to get that whole move. And there's a short right here. It's a little riskier because the modified 15 is yellow, but there's the move down. There's the retracement. There's the continuation trade. Nothing here because this is a black candle. Now, it may not have been black in real time, but it's black now, so that's what we'll do. There's your short right here. There's another short right here. You're going to have to be like the wind to trade this. If you got faster reflexes than me, you're going to get great entries. There's your entry and down. There's your entry and down. There's your entry and down. And if you have an automated trade management strategy with enough leeway, you've got the whole move down. And that's a huge move. Let's just take a look how many ticks that is. You're going to be in 1 tick below. Maximum excursion on the trade. That's 15.75 points on the NQ on that one move at from 11.11 down to 11.13. Now, you may not get the whole move. Very rarely can you get the bottom of a move, but that's the maximum excursion on the move. Here's a trade right here. That's a very dangerous trade, by the way. The market's oversold here. And this continuation trade is a little risky. Now, I wouldn't have taken it. You don't have a trade here. I wouldn't take the short on a yellow 15, and it works. I just don't want to put it in as a winner because I wouldn't have taken it. And I would have taken this short right here. It's a much more modest winner. And this is your up candle. Here's your down candle. But I don't know if I would have taken that either. There's almost no candle body. I mean, you want to trade a candle body of some sort. You just don't have it set up here. As we see it now, we have no candle outline. Now, here's a potential trade right off the 50 on a retracement and this move up. You're in here, and potentially you've got that move up. And these are great trades. And you could either get the whole trade, or you're in here, you're in here. Every retracement continues to move up. as long as the candle's outlined in green. Once you lose it, the trade begins to peter out. And you can take this trade, only this is a risky trade. I'm sorry, that's a down candle. So that's going to keep you out of the trade. You don't have anything here. You have no long moves there. And look at this trade. I mean, come on. I mean, if you can't walk away with a ton of money today, if you're fast enough to trade the NQ, you got a problem. You got great entries on the NQ 290. Now, this is defaulting to the closest fib number. I can't remember what it would be on a 290. I just don't, I mean, I'm not going to bring up the fibs. It doesn't matter. It's reading the closest fib for your two higher time frames. And that's how it's doing this analysis. And it's going to give you a very, very accurate analysis no matter what kind of tick chart you trade. So I've showed you in real time the entries. And this is how I trade. I wait for a retracement. I hope that it pulls me close to resistance. This is real tight to resistance. And I look for the continuation trade. I never take a chase trade. Multi-candle retracements are riskier. I like that single candle up and continuation down. Or you can see this candle engulfs both of the previous candles. That's a double engulfer. We have a signal for that in the full platform. Anytime the entry candle double engulfs the previous two candles, it shows you that you have a very powerful move. There's a lot of sellers there, and they're running over all the buyers in the previous two candles. And that provides you, even though it's a multi-candle pullback, that provides you with a lot of selling power and a nice move down. So we're already in 40 minutes over. I'm going to stop. I could do honestly, I could do this forever on any instrument. It doesn't make any difference. Yes, it's a completely new version, Giovanni, and just send us an email to info and we will send it to you. It works on any time frame, Peter. Listen, the point I want to make is if these are truly true independent variables that move price on your trading chart, they are independent of time and they are independent of financial instrument. If anyone ever tells you they've got an indicator or a system that only works on a single time frame, only works on certain financial instruments, and then it just doesn't work. Either these are universal forces that move price on any financial instrument in any market on any time frame, or they're not universal independent variables. You can trade a 4-hour. We have a lot of traders trading it daily. You can swing trade it. You can day trade it. The signals are just as valid. Now, obviously, you're going to have to wait a much longer period of time to get a signal on a 4-hour, or a daily, but you're going to stay in the trade for 3 or 4 or 5 days. So it's just a completely different setup, but the signals are exactly the same. And nothing is going to change. And if I eradicated this 290 tick up here and showed you this NQ without a time frame, this could be a daily. It would look exactly the same. No difference. So it doesn't make any difference what you're trading. Carl, we don't have a way for you to just send us info at Right Line Trading, Carl. So when Sergio sends you the package, he sends you the package for Sierra. Here's the email again. He should have done that, and normally we do. But here's our email, info@rightlinetrading.com. Just say, this is Carl, and I want the Sierra version. And Sergio will send you the package. And Sergio does all the installation. I mean, he'll make a time for you, get you on TeamViewer, and he'll install it to get it working perfectly for you. If you're like me and you have the tech savvy of an 8-year-old, my son is a lot better than I am working my own telephone. So he does all the installation. So you don't have to worry about that. I mean, that's part of this. He'll install it for you on Sierra, and he'll install it for you on NT7 or NT8. You don't have to worry about that. And if anything happens or there's a problem with it, you just call us and he'll fix it for you. Nothing should happen with it, but if there's anything you see that's unusual, just give us a call. We get calls all day, but so we're always here. Okay, one contract at the moment. You think I would be able to use it? Giovanni, I don't like one contract trades. I just want you to know that. I want to be honest with you. I mean, I could, give you baloney and tell you, okay, I think one contract is great. This is going to give you great entries. I just think it's hard to monetize one contract. If you have to trade one, it's going to get you good entries. But, if you can trade two, you can take a first target and then take that second one off on a runner. I think you want to lock in profit on one contract, but it's going to get you great entries. But I think it's very hard to trade one contract. That's my personal opinion. But if that's what you have to do, you're going to get really good entries with the system. Where to take that first contract off is always going to be tough for you, because you hate to be a and I'm blocking the word, but someone who just takes 2 ticks and 3 ticks at a time. I mean, you want to be able to sit back and relax after this first target's out, and you're on a trailing stop, and then you're not at risk. You've got money in the bank, and you want to let the trade roll, and just and maybe you'll hit a big one on the E-menu, and you'll get 15 or 16 ticks. And that's, I think, really puts the odds in your favor of becoming extremely profitable. I mean, we got a 4.75 point move on the E-mini. You could have ridden that down with that second contract. I think it's just scary with one, but it can be done. I think it just makes it a little tougher. I don't like to recommend it though, and I just want you to know my opinion of that. They're not included, Wouter, but if you send me an email, I'll talk to you about them. info@Rightline Trading. Okay? Just send me an email. Absolutely, Daniel. Listen, the 15 MA that I use, and if you send me an email about the 15 MA, it's really one of the most powerful indicators that we have. I will be more than happy to talk to you about adding it on for a very, very, very small additional price. I can't throw it in because although it seems real simple, and we'll talk about the 15 and the 50. If you want the 50 that's colored, this is real simple. I mean, if anybody wants the 50, I'll give it to you for free, because the 50 is just a moving average that we've colored with a slope degree. It took us no work, and it's just a 50 period simple, and there's no problem with that. Then I'll tell Sergio to include it in the package for everybody. The 15 was a real complicated indicator that really we had to bust our case on. We've been using it for the past 3.5 years, and it's really helpful. When you wait till the 15 crosses the 50 and trade in the direction, you always want to trade in the direct. If the 15 is above the 50, you can only trade long. If the 15 is below the 50, you can only trade short. And when the 15 is red and the 50 is flat or red, that's when you get your best trades. Without a doubt, that's where your best trades come in. So it does help you a lot. And I'll include the 50 in the package for everybody if they want that 50 period SMA. There's no problem with that. Leon, this is a measure of money flow. And these are quantitative markets. Remember, when we analyze a price movement on our trading chart, we don't want to see what price is doing on our trading chart. We already know. We don't want an indicator to tell us that price is moving down. I know it's moving down. I don't need the oscillator on my trading chart to head down. I know it's heading down. What I want things to do are going to be to predict for me out into the future. And what this looks at is the direction of money flow on other markets. It's looking at 9 other markets. They either correlate in the direction or the counter trend direction. These 3 lines tell me that money is flowing into the E-mini. And these bottom 2 lines, this is the only system that analyzes the status of the S&P 500 cash market. At the same time, it analyzes the direction of the E-mini futures market. I mean, isn't it better to take a trade on the E-mini futures market when the S&P 500 is moving up? This looks at 6 tick metrics and 6 volume metrics on the E-mini cash. You see, it says quant cash. This is, I'm telling you, this is a 20 contract trade. You don't get many trades where you get 8 lines moving in the same direction at the same time. And none of them are assessing the direction of price on your trading chart. These are looking at other markets. These are looking at other time frames. And these are looking at the cash markets. And you need a dual data feed for that. That's why I have a kinetic data feed. The kinetic data feed is the one that allows me to hook up that indicator to look at the status of the actual S&P 500 cash. And they're helpful to look at money flow. Now, for some reason, it doesn't provide us with data pre-market, and that's just kinetic. As soon as the market kicks in, we start getting cash data from the cash markets. And you can see S&P 500 internals are collapsing here on this E-mini short. And then when you get the turn, these cash markets turn with it. And they're not looking at price, they're not even looking at the futures market, looking at the cash market. And here's that roll again to the downside. All red, 3 lines red, cash internals on the S&P cash markets are red, quantitative markets which are assessing money flow are red. So that's what we do. We ignore price on our trading chart. We look at other time frames, other markets, and these are the cash markets. But that's the entire platform with market profile, with the whole enchilada. If you're interested in that, just send me an email. I'll be happy to talk to you about it. I mean, I'll give you our webinar price on it. It's very, very accurate. And if you're diligent and you just have patience, it will really, really work for you. Now you see we have no cash metrics on crude because there's no cash equivalent on the crude market. So it's missing 3 lines. We just have the 3 line and we have the line that assesses money flow. Now money flow on crude is only 3 markets. It's 9 markets here. And I really don't want to confuse you because this is more than I intended to talk about. But when you put this all together, it gives you a very, very accurate assessment of the direction that price is moving. And importantly, it tells you when to stand aside and not try to trade. And it keeps you out of trouble. Look at that move. Now we got that trade right here. I mean, if that isn't a gorgeous trade. Now I scaled it at 18, but it went a lot further. Right off support, you've got money flow and the 3 line in your favor, and up you go. Right, and that's the high a day. And we're careful about trading into the high a day. So that's the whole system. But the 3 line I think, is the single most powerful augmenter and will help anybody trading any system to get that 3 line to roll in your favor and to trade in the direction of your and to stay aligned in the direction of those trades. That's where you get these trades like this. And I don't care what kind of tick chart. The only thing it will not work on is Renko, and Renko I think is kind of a fraud. And this is what I'll say in the close. Stochastic requires 4 properties for the formula to work: the open, the high, the low, and the close of a candle. If you don't have the open, high, low, close of every candle, Stochastic cannot function. So if you're using standard Renko that only has a brick, it won't work. And I see so many software packages that have standard Renko and they have a stochastic included, and they just don't understand that it doesn't work. It's just tracing out price. Because if you look at the formula for stochastic, it relates the high of the move to the close and the low of the move to the close. So if you don't have these four variables, open, high, low, close, the stochastic can't function. So it works with any bar, but it will not work with a standard Renko. If you have a modified Renko that has a wick, it's good. So now you know what are in all the panels, every panel. 2 is our analysis of money flow. 3 is our 3 line, and 4 is our analysis of the cash markets. And on a market like crude, there is no cash market, so there's no middle panel. There's just the analysis of money flow. We only have 3 markets to do that with. Here we have 9. So we have 3 lines, 3 markets a line. And it does work on daily time frame. I mentioned that, Carl. Just send us an email, info@rightline trading, and say, this is Carl S., and I would like the Sierra package. Yes, Sierra charts, correct. That's all, Carl. Yes, it does. Now, Gord, we made it smarter. We took out the inputs. You do not have, that's what we're moving to on all our indicators. What we don't want to do is, everyone needs templates and all this complicated stuff when they change time frames and stuff. You'll notice that on the new 3 line, the inputs are gone. It automatically defaults to the appropriate inputs, whereas the old one, you had to stick it in. And that's what we're moving to. So you don't need individual templates for every time frame, because all you just got to do is take the indicator, throw it in, and it will know. It will look up and see what your time frame is, and its algorithm will set the 2 higher time frames based on the time frame of your trading chart. So you have no inputs you have to worry about at all. Sure, Giovanni, we do. Yeah, you do have to load NinjaTrader first. You can get a demo version. It's real easy to do. If you just go to ninjatrader.com, they'll give you a demo, and they'll give you a demo data feed. So if you're trading another platform and you want to take these signals, you can actually trade the demo version with a free data feed from CQG. It's going to work perfectly, give you the executions. If you want to trade stocks on, say, Thinkorswim, that's how you can do it. It's very, very easy. Guy, just send me an email. You know what? I haven't even thought about it. If you bought the software, I'll offer it to you at a very inexpensive price. But please just send me an email and say you're interested. info@rightlinetrading.com. Now, what you're going to do is, I'm here by myself. If you ordered, normally Rory will send you an immediate invoice, but he's on his honeymoon. Trust me, we got your order. The first thing in the morning, we will send you a confirmation email, and then we will set up a time to install it for you. Everybody who orders tonight will get installed tomorrow. So do not worry about that, believe me. Your money didn't go down a black hole. We're good. I'll send it right after the seminar, Peter. No, the package is sent via email, Carl. But then if you want to try to load it, you can. But if you just hang on to it, Sergio will format it for you. So you can do either one. It's really a pretty easy indicator to insert yourself. But if you want Sergio to format it for you, he will. Either way, he's going to get in contact with you by email and ask you if you want some help. But they're not going to go out tonight, since it's simply because I'm alone and I'm a single dad. And my son's alone. at home, and I do have to go. I have to get home. But trust me, everyone's going to be set up tomorrow, and nobody purchased down a black hole. Been around for 4.5 years, and you know, you're not just buying something that you're never going to hear from again. I always trade this system in the trading room, Victor. Always. Every morning I'm there. I get there about 2 minutes before the market opens and trade it until we make good money. Every morning. Yeah. Well, if you buy the indicators and you talk to Sergio, he'll be more than happy to format the automatic trade management strategy for you. He's really, really a nice guy. If you tell him that you want to trade the E-mini and you want to use our ATM strategy, he'll format it for you. So don't stress about that. ES, 6-tick initial stop, and CL is 10-tick initial stop. But Giovanni, you know, if you come aboard, we'll do it for you. Don't worry about it. Yes, order flow is right here. Third line on the 3 line. Order flow is a real important component to us. That's the delta moving average of the 2 higher time frames. It is integrated into the auto trader, Tyrone. It is. It doesn't, Leon. It does not include the 15 and the 50. But if you're interested, well, I'm going to send you out the 50. I'll tell Sergio to include the 50 in everyone's package, because for us that was a simple indicator. I mean, the only thing that we needed to do was figure out the best slope degree, which we already did. You know, for the input here, it's 2. And Sergio will give you that. I'll tell Sergio to send that out to you as a separate indicator for free. I'm going to charge you a little bit extra for the modified 15. If you send me an email, I'll send you out a price, because I don't know what to do yet with it. But it took us a long time to develop, and it really is a terrific indicator. And I'm giving you a big discount on the 3 line. But if you're interested, it will just be a nominal charge for it, really. But I'll send you the 50 for nothing. So you'll have the 50 and you'll have the color, and that color is important on the 50 because it's a measure of longer term momentum. When this slope is like this, it's much tougher to trade long. And when price gets to the 50, look for a bounce down. Now I'll just tell you really quickly. We tried to do a long assessment of, does slope degree on the 50 correlate with a bounce off the 50 and movement down? And it does not. What it correlates with is this. What's going on below? That's what's going to tell you what's going to happen. It's not the slope degree of the 50. But when you trend trade, that slope degree is extremely important. The more this is chugging down and the 15 is chugging down, the more likely are you're going to get a winner, as long as you trade in the direction of the 3 line. And that should set your absolute direction. If you want to take a counter trend, you got to wait for it to change, or else you're going to get run over. The stock chart has the same indicators. They're exactly the same. We still look at the cash internals, because we have if you're trading a stock that's on the E-mini, you use the cash metric on the E-mini. See, this is quant cash ES. If you're trading a NASDAQ, you put in the quant cash NASDAQ. If you're trading the stock on the Dow, you put in the quant cash Dow. And if it's on the Russell, the quant cash Russell. Now, sometimes stocks run more than one index. You have to decide which one is the most important. I mean, I think Microsoft is one of the stocks on the Dow, if I'm not mistaken. But you would be much better off looking at the NASDAQ as a whole than looking at the Dow as a whole. If you're trading DuPont, you might be better off looking at the Dow and looking at the S&P 500. So some of them you have to make a judgment In either case, they're going to help you. There's only 30 stocks in the Dow. So you have to be careful. We have 4 ways to analyze, and you don't want to use 2. It's too many lines. It's enough lines to look at as it is now. You don't want 2 cash metrics like the Dow and the S&P 500 or the NASDAQ and another. It's just too much. So just choose the basket that you think is going to have the most influence, and that's the one you use. Usually it's very, very clear cut, whether you want the NASDAQ or the S&P 500, or you want, if it's a mid-cap stock on the Russell, mid-cap Russell 2000, you're going to use the Russell. So we have the exact same platform. There's no difference whatsoever, except we use the scanner, but I just don't have time to show that. But what the scanner does is look at all these colors, and you can put up 100 of those and wait for all red to appear on the scanner, and then you get an audible visual alert, and you can open up the stock. And that's how our Forex system works too. I used to trade the Forex at 2 o'clock in the morning and just wait for a scanner signal to show me that everything was aligned, and I'd open up the Forex market and usually get a nice trade. So but the scanner is not really very powerful. I mean, it works great, but I mean, there's just not that many futures markets with a lot of liquidity that are not algorithmically controlled by the machines. I mean, I think they run gold, and our auto trader trades all of the currencies. So and it does take the input from all the indicators. Absolutely, John. The new indicator outlines the candles. You can see if I click on it, it gives you the ability to decide what you want to color your up candle as and your down candle. So you have the input. I chose dark orange and deep sky blue, but you can halo it anything you want. If you don't want a halo, you just change that to transparent, or just change it to black, and they'll all be outlined as black. So it does give you that default, and it takes away your need to put that third higher time frame in there. Now the algorithm knows it automatically without even thinking. PayPal, Stephen, just send me an email and I'll send you the link. Okay? Anyone who wants PayPal, just send me an email. I just to info@Rightline, and I'll send you the PayPal link. Don't worry about that. Let me just go out to the slides, and let me give you my email address. And this is not these slides. Here they are, right here. Info@Rightline Trading. You don't have to tell me who you are. I'll just know by your email address. Just say, please send me PayPal link, and I'll send it right out to you. No problem with that. Sure, Danny, you can pick whatever day you want to get loaded. If you want to get loaded up on tomorrow, Sergio will do it. If you want to go on Friday, Sergio will do it for you Friday. Not a problem with that. Well, remember, Peter, we're not on the TD Ameritrade platform. I do all my options trading on Thinkorswim. I love the platform, but if you want to take signals, if you want to trade stocks, you're going to have to take them off of a free Ninja Trader. You're going to have to download the demo and get a free data feed, and take the entries on Thinkorswim. We're going to go to Thinkorswim eventually, but right now I don't want you to think you can load this on Thinkorswim, because you cannot do that. Okay, Raymond. Raymond told me I have to go to sleep. I do. I've got a fever and a cough. Right. No, it's sent to info@rightlinetrading.com. That's our email, info@rightlinetrading. And as soon as I close everything up, I'm going to check all these emails. and get everything out to everybody who's made these requests. Okay? Really? I'm shocked because I mean our email. I've already looked at 20 emails from info at Right Line Trading. It's a GoDaddy address. I don't know why they should bounce. If you want to, here's what you can do. You can send the email to me. I'll give you my own email address. Hang on a second. Let me just type it in. I don't know why that should happen. If you hang on a sec, I'll just put it on there. This is my Gmail account, and I don't mind giving it out. If you want to send me, I just have to be able to type it in. And it's not letting me. Hold on one second here. I think I can type it right here. It's mark.sachs007@gmail.com. So just send it there. Believe me, that isn't going to bounce. I get all my mail there. So you just feel free to mail it to me. That's okay. So you're good. TD Ameritrade, Peter, doesn't let you hook up to NinjaTrader. Interactive Brokers does, but TD Ameritrade does not. And honestly, I'm a TD Ameritrade. I've been with them 25 years. I was with them when they were TD Waterhouse. And I'll show you. I am a diehard Thinkorswim guy right here. I use them for everything. I love them. I'm not gonna open it up, but I love that platform. But I use it for stocks, and I use it for options. But I take my signals on stocks off of my own software, because I cannot use my indicators. But I love Thinkorswim. It's a great platform, and the analysis that you can do is just, I think, is stunning. So I'm not going to open it, but I just want you to see that I'm a big fan of TOS, and I have been on it forever. So that's the way I use it. It's $149 a month, Eddie. It's the cost of the room after it's up. And I hope, we're going to make $400 or $500 a day in there. So you'll consider that to be a minor cost of doing business. Correct. So we just use mark.sachs007@gmail. If you have any trouble with the info, I don't know why you should, but if you do, you just got that. Okay, great. Okay, hey, if it works, you're good. All right, everyone, have a really, really good evening. I'll get everybody set up tonight. Before 8 o'clock tonight, you'll all have everything that you asked for. If you paid, Sergio will call you in the morning, confirm, get you set up. Believe me, we've been here for 4.5 years, and we'll probably be here for another 100. So I thank everybody for giving me their time. I'm going to render this, and I'm going to send it out. I'm going to send out the recording, and I'm also going to send a formal purchase link with that. So have a really, really nice evening. Thanks so much for giving me your time. I wouldn't proffer this indicator to you if I didn't think it wasn't going to help you immensely with your trading, because it will. And if you trade in its direction, it's going to really benefit your trading. Price moves in the direction that it points to almost all the time. Not 100%. If it did it 100% of the time, I would own an island in Tahiti. But it does it a very, very high degree of time. If you try to counter trend this line, it's really going to beat you up. So take care. Have a great night, and I hope to see everyone in the training room. And listen, we'll try. I don't know if we'll get you in tomorrow, but we'll get you in on Friday morning. So have a great night, all, and take care. And thank you again for your time. Bye-bye, all.